Yo, what's going on, traders, and welcome back, Bat Fam. Yes, I'm calling you guys the Bat Fam now, Bat Family. We're helping each other learn and grow here. Welcome back to the Builder Trader YouTube channel. In this video, I'm going to be talking about how to find candlestick patterns and key levels. Now, this video, you're going to learn how to find specific candlestick patterns that are highly probable for reversals and continuation patterns to find strong trades based on price action, as well as using key levels to find confluence for your trades for higher probability setups. Now, I'm gonna head to the charts and get started on this fire video. See you there.
Don't stop running towards your dream.
Alright everyone, what's going on? Here we are on the charts looking at the Nasdaq 100. The concepts I will be talking about and showing will be applied to the Nasdaq 100 because this is the pair I mainly look at. However, these concepts can be applied to any asset, Forex, Bitcoin, cryptos, gold, silver, oil, whatever you want to do. Alright? These concepts all go hand in hand with each other in all markets. So, first things first, get ready to take some notes. We're going to be talking about candle patterns, candlestick patterns. There's certain candlestick patterns you need to look for, or that I look for, that have a high probability of playing out. Alright, so what candlestick patterns would they be? There are breakout patterns, continuation patterns, and reversal patterns. I'm going to leave this up here for a second so you can write this down. Alright guys, and I'm going to try to make this video as quickly as I can without it going on too long. These next series of videos will all go hand in hand with each other, going off of these same exact concepts and building on top of each other. So next, we're going to be looking at key levels / support and resistance. Now, key levels and support and resistance are basically the same thing. And if you don't know what they are, you can watch my previous video that I made about support and resistance simplified. Alright, so these key levels need to be found on higher time frames and intraday time frames. These candlestick patterns that I will be introducing and talking about and teaching you need to line up on key levels of support and resistance on the higher time frames and or the intraday time frames for these trade setups to be highly probable, to have a greater probability of working out in your favor than not. So write this down if you already haven't. Alright, so now we're going to move on. So now that you can see that there's certain candlestick patterns we're looking at, breakout patterns, continuation patterns, reversal patterns. What does that mean? Right now, there's multiple different candle patterns. If you've already done some research about trading and about candlesticks and all that, you may have come across some information about different candlestick patterns and stuff. There's lots of them, but there's only a few that we're going to focus on. Okay, because remember, trading is about quality over quantity and learning high probability setups that work for you. Okay, and these high probability setups and these candle patterns work for me, which is why I'm showing you. So I'm going to illustrate these with the arrows first. We're going to start with the double bottom. If you don't know what a double bottom is, it looks like a W. Some people call it a W bottom, but essentially all a double bottom is, let me drag this arrow up, is a bullish continuation pattern or reversal pattern. So now that that's up there, so what that would look like, and that would be formed on a level of support like such. Bounce there, something like this, and then continue higher. Next pattern we're going to look at is a double top, which is a bearish continuation slash reversal pattern. So let me apply these notes. Now, some of these patterns can be considered as continuation and reversal patterns. It depends where they are in context of where they line up in the market on these key levels. Okay, a lot of time, most of the time in the market, it depends where these. It's all about context, right? Where things line up, whether they're valid or not. You know, things are more valid when they're on certain levels, whereas when they're not on certain levels. My apologies. So that's what that looks like. The double top hits resistance, comes down, comes up and hits it again, fails to break higher, and then comes down and breaks the level of support that it made and makes a low. Next, we're going to look at some continuation patterns. What a continuation pattern is, if you don't know how the market naturally moves, in an uptrend it makes higher highs and higher lows, right? If you don't understand that, you can watch my Identifying the Trend for Beginners video, and it just basically outlines the movements, the basic movements of how the market moves, essentially. Basic market movements. Essentially, a downtrend is lower highs and lower lows. Okay. So on these areas here, where I have drawn these higher low points on this uptrend, as well as these lower high points on this downtrend, these areas of support and resistance are going to have candle patterns forming on them, and that's how you're going to find these trades. However, breakout patterns are typically engulfing patterns and exhaustion candles. So I'm going to write this down. Engulfing candles, bearish, bullish engulfing, bearish engulfings, as well as exhaustion candles. Exhaustion candles are candles with long wicks. And what a wick is, if you don't know what that is, it's essentially a candlestick pattern on the lower time frame. Okay, like this would be a wick right here where I'm clicking. This wick would be a pattern on a lower time frame. Now I'll dive into some examples after explaining these basic concepts, but just saying that is what a wick would be. Now on these levels here, where continuation patterns are engulfing candles or engulfing variations. Okay, so write that down. That's very important. So right here, on these areas here, you're looking for little candles, smaller time frame candlestick patterns of engulfing candles, as well as engulfing variations. Engulfing variation is just more. Just back up. You're looking for these engulfing candles on these points, on these key levels / support and resistance, and that's how you find higher probability trades. Now, what do they look like on the charts? You know, this is all easier said than done. You know, I'm drawing these with arrows. I'm about to show you an example of what an engulfing candle looks like, as well as a double bottom and a double top, and exhaustion candles, and how you can see how price patterns and how price plays out and candle patterns play out on these certain key levels in support and resistance. The very first one we're going to look at is double bottom. This one's clear as day right here, so we're going to do this. This is on the daily time frame. Now, in trading, there are higher time frame setups and lower time frame setups if you don't know that, and you use time frame correlation in order to take advantage of intraday moves and higher time frame moves to understand when they line up with each other. Okay, so in this example we have a higher time frame double bottom, which means it's going to be a larger breakout move than if you saw this on, say, the 1 hour or 2 hour time frame. You know, the higher the time frame candle pattern equals larger moves, but they take more time to play out. Okay, so I'm going to draw a zone right here on these wicks. Now you can see on this higher time frame it is a double bottom. On the lower time frame, these wicks are also going to be little double bottoms as well on like the 30-minute, 15, 5-minute. Okay, I'm going to introduce that later on, but for now you just need to understand these basic concepts until we dive in further. Because I realize what my analytics are telling me that a lot of you guys are actually beginners and don't really know that much. So I'm going to have to break down a lot of these advanced concepts into more digestible chunks so that it clicks for you guys a lot faster. So on this double bottom, you can see what happened. It did the same exact thing as I illustrated in these arrows. Came down, tested, came up, tested again, then pushed up higher, right? So this continuation, or this would be a continuation pattern in this sequence right here, in this area. And I'm sorry, I actually said something earlier. I meant to say these are breakout patterns in here, not continuation patterns. These engulfing candles can be continuation patterns, but they're a lot of times breakout patterns, which lead to these impulsive legs up or down. Okay, but let's backtrack here. So when you see these line up with each other, you can actually take the trade. And to take a trade, there needs to be a step-by-step process for yourself in understanding time frame correlation and entries and risk management, this and that. So it's a learning process. So you have to learn all this stuff before you should even think about taking any trades. All right, it's baby steps. You got to learn the basics and build a foundation and learn how to do everything before you can just dive right in. Most people just want to dive right in and they get hurt. So now we're going to look for a double top pattern here, which we can see, well I can see. Not sure if you guys can yet, but there is a double top right here. Clean as day. You see this looks exactly like the example I drew. To the right, market pushed up and then came down and then retested that resistance one more time before pushing down bearish and hitting a different level of support, which is a support level or a key level, and then before bouncing back up to the upside. Now you see what a double top and a double bottom look like on the higher time frame, right? This is what they look like on the daily time frame. You know, they will look the same, but with just more candlesticks on like the 4 hour, the 2 hour, 1 hour, etc. Next, we're going to look at these engulfing candles. First, we're going to look at bullish engulfings. What an engulfing candle signals or symbolizes, what it represents, is stronger momentum to one side or the other. So bullish engulfing would mean more buyers in the market, more buying pressure. The momentum is bullish, essentially, and vice versa for bearish engulfings. Momentum is bearish, there's more sellers in the market is more bearish, the momentum is to the downside. Okay? Now here, for this example right here, for this bullish uptrend move, I'm going to show you this one right here. This is perfect. I'm sorry, I don't know what happened to this line. Okay, so we see we made a low here. Market pushed up, made a higher low right here. Okay. Now I'm going to use the arc tool. No, actually, I'm going to use the zone. You can see this black candle in this box It's a bullish engulfing candle. And what makes it an engulfing is that this candle outdid the last one, right? It completely outdid the body and the wick. It engulfed it entirely. It's much bigger. It outdid the previous candle. Okay? Now you can see right here where I have this blue line is the same situation, higher low point. Then it broke out and made an impulse leg up, a bullish move up. Then it came down like we have right here. Came down right here. Made another bullish engulfing and continued higher. And if you see this now, then yes, you're starting to catch on. You know, this is what it looks like. This is what continuation patterns look like, as well as breakout patterns. You see it's breaking out, but it's continuing in the direction that I was going already, or should be going. Okay? Now we're going to show some examples of bearish engulfing patterns. Alright. So let's look at this here. Now we're going to look at an example to the right. Really quick. Lower highs and lower lows, right? Now let's look at our double top example. Grab this zone tool. And look. We have engulfing candles all day right here. This yellow one. These yellow bearish candles. They're completely engulfing the previous data. The previous bullish candles. A concept that I said earlier was bearish engulfing variations. This would be a variation, right? Now this one's slightly bigger than this the bullish candle to the left, but it's not really engulfing, right? Because there's wicks and it doesn't look that clean. But this next one is almost full solid. It has just not that much of a wick, but it closed mostly solid and is a strong bearish momentum candle. It's an engulfing candle. Right? This would be a variation because these two would make up one larger engulfing candle, right? Essentially, that's what you should view this as. So we had the engulfing, came down, we had an engulfing on this area of support, or this area of resistance. We came down, and then hit a level of resistance here, and created another bearish engulfing pattern, right? And just absolutely melted. Wrong tool. Another bearish engulfing pattern and melted all the way down. This one candle outdid both of these two. But really, all an engulfing candle has to do is just engulf the previous one. You know, if the candle were to close like this, where this blue line is, if this data wasn't here, if it were to be just like this, that'd be an engulfing candle, right? Now that you understand what continuation patterns and reversal patterns look like and engulfing candles, I'm going to introduce one more thing, which is exhaustion candles. Now, we have not delved that deep into these concepts quite yet. This is not that much information, so you guys should really be able to take this in and digest this very well. Alright? After this, we're just going to continue to build on this. You know, we're building your guys' foundation here. You guys need to understand these concepts very, very well. What exhaustion candles look like are this. They represent or create candlestick patterns on the lower time frame, which is a double bottom, double top, which I was showing, or these engulfing candles, these breakout patterns or continuation patterns. All right, a lot of these candle patterns all go hand in hand. You know, many candlestick patterns can be both a reversal pattern, a continuation, or they can be all three. They can be a breakout pattern, they can be a continuation pattern, they can be a reversal pattern. All right? Trading is very paradoxical. Everything comes back onto each other in some type of way. Okay, all concepts come hand in hand with each other. So an exhaustion candle is a lower time frame candlestick pattern, often on key levels. So you can see this right here. And they can be identified by the long wicks, correct? Which makes an exhaustion candle, because exhaustion means price is failing to continue in the direction that it's going, meaning buyers are getting exhausted or sellers are getting exhausted. In this example, sellers are getting exhausted because they couldn't push down anymore. We're gonna look at one more candle pattern here. So this would be considered a bullish exhaustion pattern because the exhaustions come from the downside, from the bottom, right? Because it's failing to go lower, which means it's going to go high, which should push up. If it fails to go lower, it means the market should push higher, right? So that would be bullish exhaustion candles. A bearish exhaustion candle has a top wick, and this could be illustrated as such right here. And this is also an engulfing candle as well, because it engulfed this candle. Like I said, things go hand in hand with each other here. As you can see, this is a strong exhaustion candle that also engulfed the previous candle, which makes it a strong bearish engulfing exhaustion candle. As you can see, it hit a level of resistance, which is where this wick got created. And just for the fun of it, I am going to drop down to lower time frame just to see what candlestick pattern was formed in that wick, so you guys can see that these wicks are just candle patterns on the lower time frames. That's all they are. And being able to pick that apart using time frame correlation is how you're able to get really good entries and spot when the market is turning early on, right? Using your knowledge and the skill sets that I'm trying to show you here. You see, this is just a lower time frame engulfing pattern. Engulfing candle variation. It took 3 candles to engulf this one, right? Drag this down. 1, 2, 3. These 3 bearish ones had to outdo this one. And on an even lower time frame, we'll see what this is, if it lets me. Yeah, I'm not going to be able to pull up that example, guys, because it's just too far back in time and there's just too much candlestick data to find it on the 5-minute time frame, but I'm pretty certain it is a double top or triple top type of pattern. Take a screenshot of these notes. We're only going to build on top of them in the next video. Thanks again, everyone, for sticking around to the end of this video. Hope you guys learned something very, very valuable. This is just the beginning of a few others that I'll be putting out that will add on top of each other. And by the end of these next few videos, you should have a much greater understanding of market movements, candlestick patterns, and key levels so that you can find your own high probability trades using price action and market structure. The same concepts that I've been talking about since day one. Now, don't forget to like and subscribe. Turn on notifications. I will see you guys in the next one. Peace.